Bitcoin is back in the spotlight with bold forecasts suggesting it could reach $205,000 by the end of 2025. One of the strongest voices supporting this outlook is Carmelo Alemán, an analyst at CryptoQuant. Instead of focusing on short-term trading signals, Alemán takes a broader view. He relies on what he calls the Bitcoin yearly percentage trend. This metric looks at annual Bitcoin performance all the way back to 2011. And what he found is a striking pattern. 3 strong bullish years tend to be followed by 1 year of cooling down. That cycle aligns with Bitcoin's halving events, which cut the block rewards and historically trigger price surges. In Alemán's view, 2025 is the 3rd year of the current bullish cycle. If Bitcoin follows the average growth seen in previous cycles, we could be looking at a 120% price increase from the start of this year. Bitcoin opened 2025 at around $93,000. Add 120% growth, and you end up with a target of roughly $205,000. This would mark the top of the current cycle, according to his analysis. He also points to the realized cap metric as further confirmation. Realized cap calculates the value of all Bitcoin at the price each coin last moved. In 2025, this metric hit all-time highs, suggesting there's still more capital entering the space and that the network remains in an expansion phase. Now let's bring in another key perspective. Mike Novogratz, CEO of Galaxy Digital, recently spoke to CNBC about Bitcoin's changing role in the global financial system. He called Bitcoin a true macro asset. In his words, Bitcoin now shows up on institutional screens right next to gold, silver, and the S&P 500. And what's driving this shift? A weakening U.S. dollar. Novogratz says the dollar is in a bear market, down 10% this year against other currencies. He attributes that to geopolitical tension, changing trade policies, and general uncertainty around who will lead the Federal Reserve next. According to Novogratz, the current administration favors a weaker dollar, and that's pushing investors into assets like Bitcoin. In fact, he claims the trade is simple. Big funds are shorting the dollar and going long on Bitcoin, the euro, the yen, and even commodities like gold and silver. He also highlights growing adoption. BlackRock is now in the mix. Sovereign wealth funds are buying. Treasury departments are allocating. Retail investors have easier access than ever before. And once adoption reaches this scale, momentum becomes very difficult to slow down. Of course, not every forecast agrees on the $205,000 target. According to CoinCodex, Bitcoin could peak around $179,000 during the 3rd quarter of 2025, especially in late August. But they also expect a correction afterward, with the price possibly falling back toward $110,000. Still, that would be a very strong support level and would suggest that long-term investor confidence remains intact. Meanwhile, on the prediction market Polymarket, users assign a 33% chance that Bitcoin hits $150,000 this year. The odds for hitting $200,000 are only 14%, but 72% of users think Bitcoin will at least reach $120,000 before the year ends. So where does this leave us? With compelling data from historical trends, strong macroeconomic drivers, and a growing base of institutional support, the case for Bitcoin at $205,000 looks more than just hopeful. It looks structurally sound. But even if that number proves too optimistic, most models still expect Bitcoin to break past 6 figures again and hold those levels. That in itself is a major shift in the asset's long-term profile. Stay sharp, stay informed, and always manage your risk.